Hello, welcome to our webinar on incorporating natural capital into economic decision-making, brought to you by CFAIR, the Council on Food, Agricultural, and Resource Economics. My name is Jane Kolodinsky, and I'm the CFAIR Program Chair. I'm also a professor at the University of Vermont and Director of Research at the Arrowleaf Consulting Group. It's my pleasure to be moderating today's webinar, and thank you for taking time out of your busy day. Next slide. It's CFAIR's mission to translate high-level research and knowledge to a diverse audience that includes policymakers, elected officials, and federal administrators. When we demonstrate the value of the profession to your groups, the Council increases public appreciation for research, extension, outreach, and academic programs in agricultural and applied economics. Next slide. Before we get started, I want to provide you some background on today's topic. On Earth Day 2022, President Biden made protecting and restoring nature and using nature-based solutions a core tenet of U.S. national policy by signing Executive Order 14072, strengthening the nation's forests, communities, and local economies. Natural assets, including water, soil, air, and forests, play a role in sustaining and powering our economy. However, the data we rely on to measure the economy is mostly disconnected from the natural world. Natural capital includes resources we easily recognize and measure, such as minerals and energy, timber, agricultural land, fisheries, and water. Nevertheless, it also includes many of nature's vital services, including air and water filtration, flood protection, carbon storage, pollination for crops, and habitat for fisheries and wildlife. Currently, national accounting does not consider these services as they contribute to the economy. This webinar brings together 3 experts to discuss natural capital accounting. Next slide. Dr. Ken Bagstad is a research economist with the USGS Geosciences Environmental Change Science Center. He serves as USGS lead for the Interagency Natural Capital Accounting Initiative. Ken has led natural capital accounting efforts in the U.S. since 2016 and has supported the implementation of natural capital accounts by international organizations and at the national level in Africa, Asia, and Latin America. Next slide. J. Wesley Burnett is a research economist with interest in natural resources, conservation, agri-environmental, and energy economics. Prior to joining the USDA's Economic Research Service, ERS, in 2020, he served for 10 years in higher education. Burnett is the natural capital accounting technical lead within ERS and co-coordinator for all USD efforts in this area. Next slide. Dr. Eli Fenchel is the Cohnblow Family Professor of Natural Resource Economics at Yale University. A primary focus of his research relates to valuing and accounting for natural capital. His work in this area spans the context of benefit cost analysis and national accounting. He is particularly interested in how to develop scalable and replicable measurements. Next slide. Before we start, we wanted to explain how to ask questions during the webinar to make sure that you, the audience, knows how to engage with us. During the webinar, you can put questions to one or all of the speakers by typing it into the box in the control display accessed by clicking on the question dropdown, as shown on this slide, and sending it to the organizer. Next slide. Now I'll hand the webinar over to Ken, who will start us off. Welcome, Ken.
Thanks so much, Jane, and thanks for the opportunity to speak today. I'll be giving an introduction to natural capital accounting, which my 2 co-panelists will expand on in their presentations. Next slide. I want to start by acknowledging a large group of collaborators. First, with a group that from about 2016 to 2022 began experimental work in the US on natural capital accounting, and then which dovetailed really nicely into the time when President Biden issued Executive Order 14072, creating a system of national natural capital accounts for the US and a large number of federal government employees who have been involved in that effort. So thanks to all of those folks. Thanks. Next. So, as Jane suggested, our economic statistics are highly valuable. They're trusted, policy relevant, long-term, and they're disaggregated by scale and industry. Next. But at the same time, we know they have significant gaps. They measure the roles of labor and capital in generating economic activity, but not natural resources. So we miss cases where depletion and damage to natural resources impacts economic productivity. And on the flip side, where protection and restoration of natural resources can benefit future prosperity. Next. As a result of that well-known gap, the System of National Accounts, the international system for measuring economic activity, which is created by the UN and has been periodically revised throughout the decades, was added on to starting about 20 to 30 years ago next, with a group of system of environmental economic accounting standards. First, the SEIA Central Framework, which accounts for physical flows, environmental activities, and environmental assets. And second, SEIA Ecosystem Accounting, which accounts for the extent, conditions, services, and assets provided by ecosystems. These are designed to work together with the System of National Accounts and to track the condition and status of natural resources over time and across scales. Next. So to give an idea of how these fit together, this figure shows for water specifically, but this would apply for a number of other natural resources as well. The System of National Accounts measures natural resources like water where they enter the economy. So in this case, if we have an economic unit, like public water suppliers or water bottling companies that are producing and selling water to households or other economic units, those transactions enter the System of National Accounts. However, that water, of course, has to come from somewhere. And the SEIA Central Framework on the next line below measures those withdrawals and returns from whether they're from rivers, lakes, reservoirs, groundwater, etc. That itself is not, of course, the full picture because there are ecosystems that regulate the timing, quality, and quantity of that water. And so things like forests, rivers, and wetlands provide for that water quality, quantity, and timing that's later extracted. So these, the Central Framework and Ecosystem Accounting give us a progressively deeper view of the interactions between economy and environment. Next. These accounts are being compiled by over 90 countries as of the latest count by the United Nations. Next slide. And in the US, as Jane mentioned, since 2022, we've been working to formalize a system of natural capital accounting for the United States. This began with President Biden's executive order on Earth Day of 2022, almost 2 years ago. And in January of 2023, a national strategy for natural capital accounting was released that was produced by 27 federal government agencies and led by the White House. Next. That strategy has a lot of really valuable detail in it, but the heart of it is this Gantt chart in the middle of it. And I'll make a few points about this. One is that there's quite a number of sub-accounts that are included in a comprehensive system of natural capital accounting. We have some headline summaries that will be produced and released alongside of GDP estimates. And then we have a whole bunch of different accounts for water, land, environmental activities and jobs, energy and minerals, forests, and a number of other different categories that are going to be produced over time. The second takeaway from this diagram is that there's quite a bit of collaboration that's needed to produce these accounts. No one agency has all the information. So in many cases, there are many co-lead agencies and a number of other supporting agencies as well. And finally, there's to do this right and to produce a comprehensive system, it's going to take a number of years. And we envision a phased approach where we start with pilot accounts in light gray, move to more mature prototype accounts in medium gray, and then fully mature production grade accounts in black that are developed over the next 15 years or so. Next. There's been quite a bit of progress in these accounts just in the last year or two since the national strategy was released. These are a number of working papers, data sets, and data releases related to natural capital accounting that have been produced by a variety of agencies that are involved in this, ranging from BEA, NOAA, USDA, USGS, and many others. So it's a very fertile area of activity. Next. And finally, I'm going to show this last slide shows some takeaways from a paper I led in 2001, which was a synthesis of those early experimental activities that happened from about 2016 to 2022. And I want to highlight a few things from this. First of all, as I suggested, there are many agencies involved in producing these accounts in the United States. Our statistical and science agencies in the US are disaggregated. That requires quite a bit of coordination. It's really important that we work on developing demand for this information among all user groups. That includes federal agencies, state and local governments, the private sector, and others. There are many potential users of accounts, and the more tangible users we have for the accounts, the more we know we'll be able to produce something that's valued and used in decision making, and that there's demand to keep producing it, rather than just an exercise that's undertaken by accountants. So cultivating that demand and awareness is very important. And finally, there's a variety of technical paths that are needed to move from those initial experimental pilot accounts toward production grade accounts that are going to have the full blessing of the US statistical system, and quite a bit of technical work that needs to be undertaken to get there. What's exciting about this work is just over the last 2 years since the executive order, we've seen tremendous progress on coordination. That leadership from the White House, the Department of Commerce, and others has gone a long way toward bridging those gaps between federal agencies, and there's quite a bit of collaboration happening right now, which is really exciting. The second point I'd like to make is that the second and third points here, developing demand and users for the accounts, educating different groups on how to use them and using them in decision making, and in a great deal of technical work, there's quite a bit of space for non-federal partners to help with this. So while federal agencies ultimately will produce these statistics in the experimental stages, and when we're starting to get them out and use them in decision making, there's a tremendous amount of space for collaboration and work with academics, private and public sector, and others. So if you're interested in this, we look forward to working with you. That's my last slide, and I'm happy to turn it over to Jane and our next speaker. Thanks.
Thank you, Ken, for that comprehensive overview. For those of you just joining us, today's webinar is on natural capital accounting. Our next presenter is Wesley Burnett. Welcome, Wesley.
Thank you. So I'm Wesley Burnett. I'm with the Economic Research Service, and I'm going to talk a little bit today about what we're doing to contribute towards natural capital accounting and environmental statistics just within the ERS. So next slide, please. I do have to state the disclaimer that any views I'm sharing today are my own and don't necessarily represent any USDA or any other US government policy. Next slide, please. So this is the timeline which Ken shared previously. This comes out of the national strategy, which was released by the White House in January of 2023. And so this is a Gantt chart, but it's a timeline to give an idea of when the data is rolling out. As Ken said, for those of you who missed it, the light gray are pilot accounts, the darker gray are prototype accounts, and the black color are production grade accounts. So what I wanted to point out in this chart is just the number of efforts or accounts that the USDA is involved with, and the ERS is an agency within the USDA. So I just wanted to point some of these out. So We're a co-lead for some of the headline summary accounts, the changes in natural capital wealth. And then we're also contributing to some of the phase 1 environmental accounts at the bottom with water, with land, and other things as well. Next slide, please. What I wanted to show on this one is a couple of the other accounts that we're working on as well. So the phase 2 at the top, the pollinators accounts, and I believe Jane mentioned that in her opening when she was talking about natural capital accounting. So we are leading, but that's in conjunction with other agencies. We're leading the pollinators account, but we're also leading a soils account, which is a phase 3 account. You'll notice when you look at the timeline here that the timeline for the rollout of data is a little bit lagged relative to some of the phase 1 accounts. And so for the pollinators, we have some data that's already been developed now, some pilot accounts, and then we expect to have some prototype accounts and data by around 2027 or 2028. The soils account is a phase 3 account, and it is still an experimental stage at this point. But you'll notice that we don't have anything coming out until around 2028 for pilot data. And then we don't have any actual prototype data coming out until around 2031, 2032, somewhere in that time frame. So there's going to be a little bit of a lag with some of these accounts. And what I'm going to do is I'm just going to point out 2 of the accounts we're working on, the pollinators account and the soil health account, and show you some of our strategy and what we've done thus far, and then what the challenges are going ahead. Next slide, please. But before I get to that, I just wanted to talk real fast about the role of the ERS. Ken mentioned this in one of his slides. The federal statistical system is a broad system across the US government. It's really a decentralized network of federal agencies. It does span 125 agencies across the federal government, and it's coordinated through the Office of Management and Budget. There are 13 agencies that are identified as principal statistical agencies. The USDA ERS, my agency, is one of those, and NASS is another principal statistical agency. And so the ERS in this role is being a principal statistical agency, and also with our wealth of economic knowledge, we have a large staff of economists. It makes sense then that the ERS would serve as one of the coordinating agencies for natural capital accounting efforts within the USDA. So we're just a coordinator for the department. For those of you who don't know the ERS, this is a general definition of what we provide, but we provide the department and public with economic information and research on food, agriculture, the environment, and rural development. Next slide, please. So here's 2 of the accounts that I mentioned that are rolling out. So pollinators is very important, and pollinators affect crops. And they're affected by insects, birds, and bats, and it's also an essential ecosystem service that's provided within the environment. About 75% of crop species depend on pollination from these animals, and any sort of decline in pollination will have an impact on our food production, both here and abroad as well. The pollination accounts that we are developing will include both physical measurements of pollination, so we'll be looking at demand and supply across different segments of the economy. And then what we plan on doing is looking at some monetary values associated with those things, as well as the value of wild forage that's provided to manage pollinators. The status of this account currently is that we do have some pilot data now that's under development. We plan to have future versions of prototype data available around 2027, and then we expect to have production grade accounts somewhere around fiscal year 2030. Next slide, please. The soils account is a phase 3 account, and if you will remember from the timeline, we had a significant more lag to that. And part of the reason for the lag is because of the complexity of this particular account. But soil health in general is a foundation for our food system and for farming practices. A healthy soil is a living dynamic ecosystem in and of itself. Luckily, within the federal government, we have a lot of data available to us in order to analyze soil health. We have Soil Health Geographic Database, SURGO. We have the Natural Resources Inventory. We have satellite data with soil moisture active passive sort of mapping, SMAP available. And we have other data sources as well with a network of experimental stations run by both the federal government and extension agencies through universities across the United States. The challenge with developing a soil health account is that the account as it exists right now within the SIA framework, which Ken mentioned, that's basically the central framework, is sort of the guidebook on how we put these accounts together. As of right now, the soils account is a little bit underdeveloped within the SIA central framework. There's also this underlying question, which is how do we measure soil health? And I think if we put this to soil scientists, if we asked 100 different soil scientists, we might get 80 different answers as to how we measure soil health. So these are all things that we are working through right now. The status of the account is that it's still very much in the early stages. It's still under development. Our goal is to have pilot data by fiscal year 28 and prototype data by fiscal year 30, followed by production grade data sometime hopefully around fiscal year 32. Next slide, please. So that's all I'm going to share today. I have other slides as well if there are any questions from the audience with a little bit more details with some of these things, but I wanted to keep this fairly high level and just talk about some of the things that ERS is working on. Thank you, Jane.
Thank you, Wesley. Very, very comprehensive. Our last presenter is Eli. Welcome, Eli.
Thank you. So we can just go to the first slide, the next slide here. So I think we want to step back and talk about why do we have national statistics anyway? What do economic statistics actually do? Most people have heard of GDP, but even many economists I know don't actually know what do we actually do with GDP. So the story is we can look at these pictures on the left-hand side and we can think about agriculture as a big part of the economy. We can think about industrial production as part of the economy. We can think about natural resource extraction and use as part of the economy. We can think about services. I don't have a picture for those. And so the economy is a really complicated system. And in the 1920s, what we did is we looked at things like rail car loadings and a variety of statistics and tried to get our heads around economic activity. We didn't really talk about the economy with a capital E the way we do today. It wasn't until the 1940s when we started developing that national accounts and national accounting summaries like gross national product or gross domestic product that we wound up going from rail car loadings to sort of a headline summary statistic that gives us what's often called a bird's eye view of the economy. This helps us craft narratives and to really talk about social progress, social change, and how we're doing. And it helps motivate organization of underlying data sets that are used for a lot of other things as well. Next slide, please. So since for many years, there have been two sort of overarching critiques of gross production accounting that we are so familiar with. These are really important when with respect to the environment and natural resources. One of them is like what's in and what's out. And this is well illustrated by a quote from Robert Kennedy where he said, GNP measures everything in short except that which makes life worthwhile. And the other is that it's gross rather than net. So we're not addressing the fact that when we use natural resources, we reduce capital even if we boost revenue. And this is illustrated by a quote from Sir Partha Dasgupta, where he says GDP measures growth like a football team and thinks soccer because he's British, which measures its success only on the basis of goals it scores and doesn't count the goals it concedes. This is basically the problem of not netting off reduction. So you can think about a mining company that might mine ore and it would get revenue from doing that, but the value of its land holdings mechanically must go down as it removes the valuable ore. Next slide, please. So this really comes to head in discussions about sustainable development. So our policy definition for sustainable development is generally meeting the needs of the present without compromising the ability of future generations to meet their needs. You can really think of this as paraphrasing Hicks's concept of income, which is income is what we can consume without compromising future consumption. This has really pushed internationally and nationally discussions of moving beyond GDP, and that's really addressing those two sort of overarching concerns that I just laid out, and whether this is through the international governance community organized through the UN, whether it's sort of business leaders thinking through the World Economic Forum, or whether it's financial leaders and financial regulators through things like the Network for Greening the Financial System. Next slide, please. We also are seeing lots of statements from at the ministerial level in the G7, in the G20, and other global agreements like the Global Biodiversity Framework. And you see many of these are alluding to the system of environmental economic accounting or national accounts. Next slide, please. And what we're seeing around the world is many countries starting and really advancing programs in environmental economic accounting or natural capital accounting. This is just a sample of the countries that are doing things. I would say many countries are slightly ahead of the US formally, though I think there's been a lot of good research done in the US for a number of years. The other interesting thing that's happening is we can think about the system of national accounts, which is what helps us organize the data for even GDP. That is being revised right now. And there are a lot of conversations about how to make that system broader, even if the GDP summary stays a bit narrower, and how to think about well-being, how to think about the environment, how to think about natural resources. There's lots of updates coming, and there's lots of opportunities for comment on that process as well. So I would keep my eyes peeled for that if this is something you'd like to be engaged in. Next slide, please. And we've heard enough about the US strategy, so we'll go to the next slide. So we've heard a lot of talk, or I've just shown you there's a lot of talk, and we know the US is sort of cranking up, and there's actually been a lot of progress in the last 2 years. I think these data are from 2021, they might be 2022. This is countries that report to the OECD. So since 1993, there have been various types of natural resources or natural capital included in the international agreements related to what should be on national balance sheets. These sit in an area of the balance sheet called the non-financial section of the balance sheet. Aside from cultivated biological resources, you can sort of see the headlines here on the left side of your screen. Cultivated biological resources, so think orchards, think plantation forests, potentially livestock. These are cultivated biological resources that and they are considered produced assets. Everything else on this list is considered a non-produced asset. They're just separate sections of the balance sheet. And so you might see things like non-cultivated biological resources. These would be wild managed forests, like most of our federal forest land and most private forest land. Our fish stocks in the EEZ that are managed, have management plans. So, and then you can sort of see our crosstabs for countries that report to the OECD. Of what's actually getting reported in each of these bins. And you can see that the US a couple of years ago started, and these are sort of advanced stage experimental accounts or official statistics. And so the US, I believe, has an advanced stage partial land account now. And that's all that we've done historically. Next stage, please. There's also been an assessment, as Ken pointed out, of the system of environmental economic accounting. This was done in 2022. What I will say is if you actually dig into that number, there's a lot more talk than there is action. There are lots of broken data links if you go through this assessment, though some of them you can actually figure out if you're willing to spend the time of where they're supposed to be. But what you actually find is most of these are environmental data summaries. They're not really environmental economic accounts quite yet. A lot of the economic elements are missing. Next, please. I think we went one too far. Can we go back one? So there's a lot of opportunity here, and there's still a lot of work to do. And the question is why to do it. And I think most economists I know of in agricultural economics and natural resource economics come out of a world of benefit cost analysis, where we're looking at individual projects, programs, rules, etc. And so it's important to realize that we use our national accounts to do ex post benefit cost assessment. And what I mean by this is the thought experiment here is that last year becomes the counterfactual for this year, as if, so we're going to keep, say, relative prices the same, and ask, are we doing better than it looked like we were doing last year if everything had just chunked along the same as it was last year? That's what we can do with national accounts in the benefit cost space. Maybe they can provide data for some other things, but they're really not well suited for doing a specific program or project benefit cost analysis. What they are really well suited for, and these are really important policy issues on the horizon, are environmentally linked trade. So we're seeing things like the deforestation-free products regulation, carbon border adjustment mechanisms coming out of the European Union. These are just samples I grabbed, where in order for these to fulfill their environmental goals, they need to be linked to good environmental economic data. Otherwise, they start to look like protectionist trade policy. So either way, whether you're for these or against these, having good environmental economic data is like really important for making these like workable. We're also seeing a lot of development in the area of credit risk, both in the sovereign space and increasingly here in the domestic space. So the IMF has gotten interested in sort of what happens when you actually account for depreciation of natural resources and net operating balances of countries. We're starting to see these show up in sovereign debt ratings. We're starting to see environmental conditions show up in the municipal bond market. All of these things are very important places where natural capital matters. And the other thing is, if we were to think about how do we actually want to forecast long-term growth, for long-term revenue, long-term liabilities for state, municipal, federal budgets, understanding how the balance sheet is evolving is really important. It's trying to do this all based on a revenue statement. It's a little bit like half-hearted. And so there's a lot of opportunities to improve our understandings of both budget forecasting, but also regional planning. If we think about most of the regional planning models, things like InPlan that are used, they build largely on national accounts data, the national accounts data, and then they might glom on an environmental component ex post to try and do something, and rather than building it in on the front end, so it's integrated with economic data. Next slide, please. And I'll wrap up quickly, Jane. One really important thing about this is that how do we address what's in and what's out? The US strategy says, look, there's a bunch of stuff already in the system of national accounts that's slightly expanded by the SIA program. But there are other things that we know matter, particularly around budget forecasting, around liabilities related to sort of what's often called defensive expenditures. And that is like defensive capital that we've gotten somehow that we didn't have to pay for, so we can't carry it forward using like an inventory measure of a capital accounting, but yet we know if we lose it, it's going to drive up costs. That is outside, this is from national accounts, but needs to be accounted for. We also know that households produce a lot of goods and services for themselves, particularly outdoor leisure, which is highly valuable. And so what the US strategy does is lay out 3 different accounting boundaries, which is actually, I don't know, I don't think this is crazy because with a computer, we all are used to doing data pivots now. But the challenge is a lot of the initial structure was developed long before computers. And so this is actually a big advance to understand that we can do these data pivots and do a small number of boundaries. And then we can decide about whether or not what the right boundary is for right questions and see if it matters. Next slide. I'm trying to wrap up. Here's the timeline that everybody loves. If people want me to go through it later, you can ask, but we're going to go to the next slide because I'm out of time. And I just want to say that, like, I think a lot of people think about this on what's the left-hand side of this scale, which is like we use these data to assess progress or maybe forecast big general equilibrium models. But the other part of national statistics are really these like very mundane, maybe less, less grandiose statements that we make that have to do with helping us do a better job forecasting budgets and tax base. They give out what's leading to changes in price stability, what's changes in creditworthiness, regional planning models, and those are really important. So aligning these data is really going to support a lot of those basic things, which is really where I think a lot of the support for our national accounts actually comes from, not just having a scorecard like GDP. I'll stop here, so there's time for discussion.